16.32 lakh crore rupees, just gone, in 2 days. Right now, oil prices are absolutely surging. Global markets are shaking. And economists are whispering a word that once haunted the entire global economy back in the 1970s, stagflation. With tensions in the Middle East boiling over and a critical shipping lane basically choked off, the global economy is really on a knife's edge. So today, we're going to break down exactly what is happening, why it matters so much, and of course, what it all means for your money.
All right, here's the game plan. First up, we'll get into the oil shock that really kicked this whole thing off. Then we'll unpack that economic monster known as stagflation. After that, we'll see how the markets are reacting and, talk through a potential investment playbook. And finally, we'll wrap up with what you should be watching for next. Let's dive in.
So where did all this chaos even begin? Well, to really understand the panic that's sweeping through the markets, you have to follow the money. And it all leads back to one thing: oil. And there's one specific number that has put the entire world on edge.
$94. That's the price that Brent crude oil surged to, its highest level since way back in November of 2022. We're talking a jump of over 10% in a shockingly short amount of time. And listen, this isn't just some number on a chart, it's a shockwave that's hitting every single corner of the global economy. And it all started with a conflict that escalated fast.
I mean, things moved incredibly fast. In early March, that long-simmering conflict between the US, Israel, and Iran just hit a new, really dangerous phase. By March 6th, the rhetoric got turned up to 11, with President Trump calling for Iran's unconditional surrender. And at the very same time, a critical threat emerged: the potential shutdown of oil production and the closure of one of the world's most important energy arteries.
And the warning that came next was just incredibly stark. This was not some vague diplomatic statement. Qatar's energy minister laid it out in brutally clear terms. If our tankers can't get through, the oil stops flowing. Period. That single threat put the entire global energy supply on notice.
And here's exactly why that warning carried so much weight. The Strait of Hormuz isn't just some shipping lane. It is the choke point for global energy. We're talking about almost a fifth of the entire world's oil passing through this tiny little waterway every single day. For huge economies like India and China, it's an absolute lifeline. So when it closes, it doesn't just mean more expensive gas at the pump. It threatens to grind everything from air travel to heating homes to a halt.
So this sudden oil shock has revived fears of an economic condition that, frankly, many hoped was just a relic of the 1970s. And this is leading us to a much bigger, much more complicated problem. And that word is stagflation. It's basically a perfect storm of economic pain. Think about it. It's a mashup of stagnation and inflation. This is where you get three terrible things all happening at once. The economy just stops growing, prices for everything you buy keep rising, and more people start losing their jobs. It is, quite literally, the worst of all worlds.
The term itself was actually coined way back in 1965 by a British politician who was describing this exact toxic brew. And it's wild because his words from decades ago are just echoing today. This isn't your normal recession. So what makes stagflation so uniquely dangerous?
Well, the reason economists and central bankers just dread this scenario is because it completely ties their hands. It creates this impossible catch-22, where all of their usual tools for fixing a broken economy suddenly risk making things much, much worse. I mean, this is the dilemma right here. On one hand, to fight inflation, a central bank would normally raise interest rates. That makes borrowing more expensive, it cools down spending. But in this case, that would just slam the brakes on an economy that's already stalled. On the other hand, if they try to fight stagnation by lowering rates to get things moving again, they risk pouring gasoline on the fire of inflation. They are completely trapped between a rock and a hard place.
Okay, so let's look at how this perfect storm of geopolitical tension and economic theory is actually playing out in the real world, how it's hitting markets and retirement accounts everywhere.
Remember that number I opened with? 16.32 lakh crore rupees. That is the absolutely staggering amount of wealth that just evaporated from the Indian stock markets in 2 trading sessions. A brutal, swift, and direct consequence of this escalating crisis.
And this wasn't just an Indian story, not by a long shot. The financial contagion spread, and it spread quickly. You can see markets across Asia were hit particularly hard. South Korea's Kospi got absolutely hammered, down over 18%, and Japan's Nikkei fell nearly 8%. It's just a brutal reminder of how interconnected our global financial system really is.
Now, for a country like India, the stakes are incredibly high. Why? Well, because India imports about 85% of its oil, so when crude prices spike like this, it creates a whole cascade of problems. It risks widening the trade deficit. That means the country is spending way more on imports than it's making from exports. That puts downward pressure on the rupee and threatens to just bake in higher inflation for the long term, all while choking off economic growth.
So, with all of this chaos, the million-dollar question, or maybe the 16 lakh crore rupee question, is what on earth are investors supposed to do, right? Is there anywhere to hide?
So, where are investors looking for shelter? Well, historically, a few areas tend to hold up better in these kinds of conditions. Gold is the classic safe haven, right? A hedge against both inflation and just general uncertainty. You've also got defensive sectors like pharmaceuticals, which people need no matter what the economy is doing. And in times of conflict, it's no surprise that defense and aerospace stocks see more interest. Some analysts even point to domestic banking as a potential spot of relative safety.
Now, on the flip side, some sectors are directly in the line of fire. I mean, anything that uses a lot of oil, think airlines, oil marketing companies, paint manufacturers, they all get squeezed by high costs. And automakers or companies selling, non-essential goods, they also suffer because when people are paying more for fuel and for food, there's simply less money left over for a new car or other big purchases. But amidst all this fear, the expert advice is really clear. Don't panic. This quote from Tanvi Kanchan captures the sentiment perfectly. This is a time for careful, disciplined thinking, not emotional reactions. It's about reviewing your strategy, avoiding excessive risk, and being ready to adjust as the situation evolves.
Okay, the key takeaway here is that this is a really fluid situation. Things can get better, or they could get a whole lot worse. So to navigate the weeks ahead, you really need to know exactly what signals to be watching for.
Here's a really simple watch list for you. First, keep your eyes glued to the price of oil. Does it stay stubbornly high, or does it start to come down? That is the primary driver of this whole crisis. Second, listen very carefully to what the central bankers are saying, especially at the US Fed. Their language will give you clues about how they plan to navigate their impossible choice. And third, and maybe most importantly, watch the headlines coming out of the Middle East. Any sign of de-escalation will be a massive relief for the markets.
And that leaves us with one final critical question. The parallels to the oil shocks and the stagflation of the 1970s are just impossible to ignore. But our world today is also vastly different. So are we simply doomed to repeat economic history? Or is the global economy about to write a brand new and maybe even more unpredictable chapter? If you found this video helpful, please like the video and subscribe to the channel for more deep insights on global finance and investing. Also share your thoughts in the comments below. Do you think the world is heading towards stagflation again?